Good morning and welcome to the VSA Capital 5 Minute Morning Miner. Oh, I was mumbling that slightly. Sorry. Welcome to the VSA Capital 5 Minute Morning Miner. That's better. On Thursday, October the 27th. Right. Good morning, Paul. How are you?
Good morning. Did you get wet cycling in or did you miss it?
No, I missed it actually. I was dry cycle riding.
Okay.
But I must admit I was a bit stiff this morning. I didn't exactly pedal quite as fast as I normally do. I was about 4 minutes slower. There you go. Anyway, look, let's not natter too much about that because there's quite a few things to talk about this morning, actually. So why don't we start off with one of our little favourites? And we've been talking a lot about lithium, and everybody wants to talk about lithium at the moment. And Atlantic Lithium have put out a quarterly report. They're doing a webinar. I think they've got a new people on board. You name it. They've just put about everything. They are doing a lot of PR work at the moment, which is always a little bit worrying. It means everything is out there in the market. There's no new news. But what was your take on all of this today, Paul?
Well, yes, quite a bit of news out from Atlantic Lithium, Shanghai Mining Club member as well, Ghana Lithium Explorer, and a quarterly report out for the period ended 30th of September. All of these firms rushing to get their quarterlies posted according to regulatory rules by the end of October. Pre-feasibility study was completed on Ewoyaa during the quarter here, which gives a spectacular estimated return on investment there, 224% post-tax IRR and a payback of less than 5 months if you go ahead and finance this project. They also appointed a new chief operating officer by the name of Keith Muller. Those names may be familiar to some of the people out in of listeners here. And they also commenced trading on the Australian Stock Exchange, but while at the end of the quarter maintaining Australian 23 million in cash. So there will be a fundraise coming here, and that's probably why they're doing all of the PR work that they are.
It does rather smell like that, doesn't it? But that doesn't mean it's a bad thing. Stock's up 1.5p today, 35.8p. It's actually one of the few stocks I think that are, in the UK market that are actually up year to date. So well done them.
And it is a spectacular rate of return that's estimated in this, so there is no reason at all why this should not be financed.
It's a great project, and I believe that Neil Herbert, the chairman, who's a very good guy, is telling people it is the best project that he's ever seen in his life. So there you have it. Anyway, that's Atlantic Lithium. Let's also, I'll tell you what, why don't we also talk quickly a little bit about TSX New Range Gold, because they're buying, aren't they, the Korean, I pronounced that wrong, damn it all, project off Great Panther. And this is all down. Anyway, tell us all about it.
Yes, that's right. One of the remaining assets of Great Panther, which is dropped into receivership, the TSX listed silver producer. They New Range Gold, also TSX listed, is buying the Coricancha gold, silver, copper, lead, zinc project mine located in central Peru. It is a narrow vein, high-grade underground mine, about 90 kilometers east of Lima. It does have a 600-ton daily processing plant along with storage facility, and the underground and surface infrastructure is already in place. So that is a good deal for New Range in order to get them into production status and essentially a little bit of cash to come back for the poor people holding the paper of failed Great Panther.
Yeah. Now, also, there's quite a lot of news out on lithium hydroxide plants, etc. We had the Alchemy figures today. They don't tell you an awful lot because there's been quite a lot of news out on it anyway. But this is a company that obviously we raised money for in August at £1. They're now trading about £1.50. So again, people have about a 50% return from that in just a few months. It's a very exciting project, obviously, to build a lithium hydroxide plant on Tees Valley, and then also a lithium sulfate plant down in Australia. So I'm sure there'll be lots more news on that soon. People want to know about it, do this touch. But Paul, you've also been looking at standard lithium, haven't you?
Yes, I have, and the Standard Lithium has announced that they do have their demonstration plant up and running now, installed at their Arkansas facility. Arkansas being relatively unique in this sense, in that it's the first demo plant to extract lithium at commercial rates, essentially from oil field brines as opposed to surface volcanic derived brines. So lots of people have been watching this story, particularly because it is related to direct lithium hydroxide production at the tail end of the plant. So it's they are making steady progress, but there has been a lot of flack in the marketplace over many months about whether or not it's accurately valued and over promoted and things like that.
Actually, going off onto a slight red herring, it is LME week, so things are cropping up. And I was at a very, very good lunch yesterday with Wogan, the natural resources traders in critical metals. Lovely people, great lunch. So if anybody from Wogan is listening, then please, thank you very much. But one of the discussions I was having actually was this whole issue with brine extraction, where there was talk about how people sort of talk about how easy they make this brine sound easy. Oh, you just drill down, the brines come up, you pump it back in, etc., etc. It just isn't that easy. It's actually harder than looking for oil. With oil, you can use seismic and you find an oil well enclosed in rock. The problem with the brines is you actually don't know where it is. It's all over the place. It's permeating in and out of the rock. There isn't any sort of natural major resource. It's a pretty sort of random, dig in the dark. And so there's a lot of, I think there's still an awful lot of work to be done before brines are proved successful. Would you agree with that, Paul?
There is a lot more complexity simply because the brines haven't been studied nearly to the detail that the oil industry has had 100 years of prior study on, whereas lithium brines no more than 40 or so at real scale. And particularly for the other sources of brines other than volcanic surface brines, those have been studied even less, only less than 20 years or so. So yes, much more complex, and you can't sell the brine right as it comes up out of the ground, not like crude oil.
Anyway, just an interesting thought for all of those that are looking at that space. Now, also just quickly, Paul, we don't want to run out of time. We've had from Rainbow Rare Earths, we just had their annual report release. That didn't really tell a lot, but we had a bit out on ionic rare earths, didn't we?
Yes, and that's a Shanghai Mining Club member too. Ionic with the rare earth clay explorer in Uganda. And they have announced that their environmental impact study has been approved by the Uganda government, which is one of the key permits needed in order to fulfill the issue of a mining license for the Makautu ionic rare earth clays there in Uganda. So well done them. And the speed actually was pretty good, only about 9 months between the date of filing and the issue. So Canada, take note.
Yeah. We also, what it's worth, we had Q3 production update from Anglo American. We tend to talk about the junior miners on this podcast, but actually they was sort of fine. There was nothing wrong with them, nothing brilliant with them. The stock actually is off 60p or so today, but that's only 2%. So the market was obviously slightly disappointed. But actually Anglos has held up, as have the UK miners in general, partially because of the strong yield, of course, has held up relatively well. So we're not surprised that there's a few profit takings take place there. Right, we've probably talked for far too long, Paul. So we'll call it a day there, and we'll be back tomorrow.
We sure will. Thanks.